Both models basically see the price of Bitcoin running up into late July, early August, and then a huge dip August into September, all the way down to 105 or 112, and then kind of a rebound back up to that 126 or 128K level. That was me 1 month ago. For those of you guys who've been following me for a while now, this drop, this dip in the market is no surprise. This is something we've been talking about for over a month now. In this video, I'm gonna show you exactly why this drop happened, what to expect next going into September and October, the key signals that prove that the cycle top is not yet in. There's a ton of people saying that the cycle topped and it's over. They're just so stupid. We are nowhere close to the top of this market, and why this dip, this seasonal dip, is actually the fuel, historically the fuel that we need to head a lot higher. Okay, so what caused the sell-off we're going through right now? As you guys know, last week, I think it was last week, the PPI data came in, which is just basically data on inflation, and it came in a lot hotter than people expected. PPI stands for Producer Price Index, and you can think of it as like the origin point for the pricing of all goods and services. Basically, the reason people were freaking out is because if the origin point for all these goods and services is seeing a meaningful bump in inflation, that means that can work its way downstream into the economy, which obviously would be really bearish. Now, if you actually look under the hood, a key contributor to this bump in PPI was actually a 5.8% increase in portfolio management fees. This is a component of financial services costs. Basically, it means that people are paying higher management fees for their assets under management. Basically, you can think of it as because the stock market has gone up so much, these portfolio managers are charging higher fees. And that was a key contributor to this bump in PPI, which is something that really isn't meaningful when it comes to inflation and worrying about inflation. It basically means that currently with this PPI data, it's just not something that anyone needs to worry about. So if that's the case, why are the crypto markets still selling off? Why are we still seeing collapsing price in Bitcoin and Ethereum? Well, some of that has to do with the fact that Bitcoin and Ethereum over the weeks before this moved up so fast and so rapidly. Like we saw Bitcoin hit a new all-time high. ETH was like on the cusp of breaking its all-time high. And during that process, a ton of leverage had been built up in the system. So there was a lot of levered positions in the market. And so when this PPI report came out and it kind of collapsed the market enough, it started this sort of liquidation cascade that caused all these long positions that were levered up to get liquidated, causing a move down lower, causing the next batch to get liquidated, causing a move down lower, et cetera, et cetera. It sort of created this bearish spiral for Bitcoin and Ethereum's price. On top of that, you have the fact that it's August. And I've been talking about for a long time that August seasonally is actually a very bearish month for crypto overall. I highlighted this chart showing that the median return for August is actually negative 7.49%. For whatever reason, August is just a bearish month for crypto. So if you kind of bring all these things together and add them up, it just makes a lot of sense that we would see a sell-off in August. Now, on top of this, I've been talking a lot about the TGA rebuild. The TGA rebuild is basically when the government refills its bank account. Right now, its bank account is empty and it needs to refill its bank account. And the way they refill that is by taking out more debt. It's kind of like if your bank account was empty and so you maxed out your credit card to get more money to go pay for things. Only when the government does it, it's kind of like a liquidity draw from the global liquidity supply. Initially, it's not affecting the global liquidity because, as we talked about in the past, the initial draw is coming from the RRP, and that's more liquidity neutral. But about starting in September, around the end of August, bleeding into the start of September, the RRP will be exhausted, and the way that they're going to refill that Treasury General account is going to come from bank reserves. And this is liquidity negative. And as we know, when liquidity goes down, when we see a decline in global liquidity, that's actually really bad for Bitcoin and especially risk assets like Ethereum, altcoins, etc. And this should be going on until about the end of September. And so this is also just a bearish thing kind of in the mix where, maybe savvy investors know this is coming. And so they're a little bit more skittish, which is maybe contributing more to this drawdown that we're currently seeing in the market. Maybe it's not like that. Maybe most people aren't aware of this, and we're not going to really see the effects of this until a few months after the drawdown or during the drawdown. It's hard to tell, but overall, it just creates sort of like this bearish mix or bearish tilt going into about the first half of September. Now, after the first half of September, I mentioned the TGA drawdown goes until the end of September, but around the middle of September, we're getting the next Fed meeting. And right now, the odds are really high that we're going to see a rate cut by the Fed, currently sitting around 70% odds that we are going to see a cut versus 28% odds of no change. And so I'm expecting when we actually see that cut, we're going to see a big boost in sentiment in the market. Even though the effects of that cut take a little bit while to kind of work their way into the system, the sentiment boost from that cut should work its way into the market overnight, which could be that catalyst we need to kind of re-kickstart the market and start sending prices higher in the middle of September rather than when the TGA drawdown ends, which is around the end of September. Now, this is made even more complicated by the fact that we have Jackson Hole at the end of this week. Jerome Powell is going to be speaking at Jackson Hole, and historically during these meetings, they're a little bit looser with their words. And if we were going to get any hints at a September rate cut, it would likely be at this meeting. And so depending on how this meeting goes, if he's more hawkish, we could actually see a further worsening of the current situation and prices go much, much lower. If he's neutral, I have no idea. It's really hard to guess how that would play out if he's neutral. But if he's dovish, if he's like hinting at, hey, we're going to definitely see rate cuts in September, you can expect the market to potentially pick up post that meeting and start heading higher. I don't know if it'll be just like a slow grind higher or what, but that could act as sort of a preemptive sentiment boost before September. I still think the September rate cut, when we actually get it, would be like the biggest boost, but this could be like a mini boost that kind of holds us over until that rate cut. But keep in mind, in between now and the rate cut, we have like a ton of different landmines that just imagine the market is like sort of in a really fragile state between now and then. And we have a ton of different landmines that we could hit. So we have more inflation prints and things like that if they go sideways in a direction that the market doesn't like, could be further reasons to see the market sell off. Now, personally, my take for by the end of August would be that it would be more like 2020, where we had kind of like this moderate increase. I would even take something like, where we are right now, like a minus 1.37, minus 2%, somewhere in there, versus, previous August have actually been pretty horrific, where we've had like minus 17%, minus 18%, minus 7%, minus 9%. Like that would mean we're going a lot lower if we were to see a typical August return, which the typical is minus 7.49%. So my gut take is that we don't see that. We're closer to either plus or minus 2%. We're closer to the plus or minus 2% range. And I don't know exactly why I feel like that if you actually just look at the data, it's like, it's super bearish, barring, some good news out of Jackson Hole. But that's just kind of my gut take is plus or minus 2%. Now, right now, there's a ton of people that are saying that Bitcoin's topped this cycle, it's over, and like, that's it. The entire thing is done. And they're kind of loosely basing this off the fact that back in 2017, the cycle topped in December. 2021, the cycle topped in November, and there's a lot of people that were expecting this cycle to get front ran and maybe top anywhere between August and October. So a lot of people are pointing to that and saying, hey, this is a cycle top. It's over and it's only lower from here. However, if you look at the bull market peak indicators, every cycle, these are extremely reliable indicators timing when we've hit the cycle top. And if you were to look at this list today of the 30 most reliable Bitcoin top indicators, like they mark, hey, when we've hit the Bitcoin peak. And if you had to guess how many of these have currently been hit, considering it's late 2025, I wouldn't consider it unreasonable to see that, we'd had 20 or 25 or at least 15 of these things showing that they've been hit, considering, we're approaching the end of 2025. That would seem extremely reasonable if we were really close to the top. But not only have we not seen 25 of these hit, we haven't seen 15 of these hit. We haven't even seen 10 of these hit. Currently, as of today, 0 of 30 of the bull market peak indicators have been hit, meaning 0 of 30 of these are indicating that we've approached the top or we've hit the top. Again, as we get close to the top, you'd expect at least some of them to be marked off or hit. If we were at the top, you would definitely expect at least most of them to show that we've hit. But as of today, 0 of 30 have hit, showing that it's very, very unlikely that we are anywhere close to the top of this market, which is hard, I know, for a lot of you guys to grasp, considering there's a lot of you guys that think we are close to the top. But according to things like the Pi cycle top indicator, which this thing literally has never missed. And there's quite a few of these things that have never missed. They've been consistently always right. Not one of them, not even one of them is showing that we've hit the top. And as some of you guys know, it's actually my belief that we're about to head into the very first Bitcoin 5-year cycle. I am not going to go into details about why I believe that in this video. I have a ton of videos you can go watch of my past videos. If you want to know why I believe that, you can watch my video, my game plan for the next 90 days in crypto, or you can check out the video, I've waited years for this macro setup. It's finally here. In both of those, I talk about why I believe we're heading into Bitcoin's first ever 5-year cycle. And maybe some of you guys will at least entertain this thought, considering 0 of 30 of the Bitcoin's top indicators as we're approaching the end half of 2025 have yet to be hit. It's worth at least checking out the video and seeing what I mean. That leads us to what I expect to happen next. After we get that first rate cut, which is currently priced in September, I expect things to flip like very, very bullish going into October. If you look back on this chart, you'll see that October is historically the single most bullish month, averaging around 21% total gains for Bitcoin. Meaning if we were to go up from today's prices, that would put us at around $136,000 per Bitcoin by the end of October. Not that I expect us to hit that exact number. I was just giving you an idea of how insanely bullish October historically has been. And so like I've said across, I don't know how many videos, I expect that in October, things will really start to heat up. We're going to get some altcoin ETF approvals. I believe that is the single most likely starting point for alt season. So maybe, I don't know for sure if it'll be in the first half of October, but for sure by that end half of October, I believe you'll see altcoins really start to heat up, and we'll finally kind of get that ignition point for alt season to really gain some traction. And from there, I personally believe that we are not going to top at the end of the year. We're actually going to roll into early 2026. We're going to see a pause at some point in 2026. I don't know if that's going to be, summer or, earlier than that. I'm not sure exactly yet. But we're going to basically have a stopping point at some point in 2026 before we see a second blow off top rally at the end of 2026. That is my current base case for how this market plays out. But the short-term picture is exactly what I've been saying. You guys have heard this so many times, but sometimes you need to hear it again when we're actually going through the sell-off. Second half of August into the first half of September, bearish. Second half of September into October, things should start to pick up. And for sure, by the second half of October, that's where the most likely point currently for alt season ignition and for things to really start going bananas. Now, it is worth considering the bear case or the bear side of like, if I was wrong, how would things play out and what would be the cause or the trigger that would cause me to be wrong? And right now, the single most, as I said at the beginning of this video, the single most deadly thing that could kill the bull run, alt season, everything, like obliterate everything, is inflation. So inflation ticking up meaningfully. Okay, if it goes to like 3.5 or whatever, like we're fine. If we see a peak above 4%, or maybe even the high threes, that's when things start to get really sketchy. Okay, if we really see inflation picking back up, that is going to cause a set of policy decisions that are really, really bad for our bags and everything that we're currently doing. That would be extremely bad for everything. It basically mean that we either don't get rate cuts, as I mentioned, or we start getting rate hikes. Basically, the way that the Fed deals with inflation is by stifling the economy. It's by slowing everything down, making everyone poor so they're not spending a lot of money. There's not a lot of wage growth. The economy slows down. And when the economy slows down, people buy less stuff. When they buy less stuff, inflation goes down. And that would be just really not fun. So if you really were like hyper paranoid and you're like, I don't know, I'm really freaked out about these things, keep a really close eye on inflation because that is the silent killer that could destroy everything. The other thing to really watch out for is if I was wrong, if we weren't going to see this cycle bleed into 2026, we would have to see some insane froth from October to December. Like I'm talking just absolute unhinged insanity. If Bitcoin were to like rip all the way to like 250K, ETH staying at like 9,000, 10,000, your altcoins are up like 100x, 150x, 70x, somewhere in there. All your friends are talking about crypto. Everyone's crypto. I love crypto. If it really got out of control really, really fast, that would freak me out. That would be like, okay, because we have a ton of liquidity coming in 2026, but kind of similar to what we just went through, where we saw the market really rally up to, new all-time high for Bitcoin and then collapse. That was like a mini version of sort of what I'm talking about, where if the market really speeds up into these end months and gets really unstable because of that, we could see that sort of like large-scale liquidation cascade where too much froth builds up in the market and it just has to unwind. But because it's such a larger scale, that unwinding process basically goes into 2026, and we kind of miss the big liquidity bursts that kind of come with it because that unwinding process is just too powerful, and psychologically it just spurns too many people. They lose too much money, and that could also completely kill the odds of like a rolling into 2026. But if that happens, that entails like everything going ridiculously high. So either outcome, you're getting like this crazy blow off top. And I wouldn't put that as likely. Like the idea that like between October and December we could fit in like that much growth is crazy to me. Not impossible. I'm not going to like outright rule it out, but I just say it's a lot lower odds than what I'm talking about, which is kind of like this build up into early 2026. And then a pause and then a blow off top late 2026. And I'm now not the only one saying this. I've seen some people hinting at they think that this could extend into 2026. And so people are starting to catch on that if you actually look at the underlying liquidity conditions, everything peaks 2026. It doesn't peak in 2025 like historically we've seen. Finally, if you break down what currently the market's going through, where we had this giant liquidity cascade, it's actually extremely bullish. It's actually the fuel that you need to go higher. When you get too much leverage built up in the system, the market becomes unhealthy. It's too shaky. And what markets like to do is they like to crawl up a wall of worry. Basically, you want to see markets like slowly climb up, not like get out of control and go up too fast, which is exactly what I just outlined is like a killer situation that could limit the growth of the market. And so when you have these like mini cascade events like this, it flushes all that leverage out of the system and allows the market to resume climbing higher on a more in like a more sustained fashion. And so weirdly or counterintuitively to how most people think, right now the market's actually sitting in a pretty healthy state. There's a lot of fear, so we could cascade lower, a little bit lower. And like I said, Jackson Hole is going to be Jackson Hole, and some of these inflation prints could be kind of headline sell-off events. But really, that should be sort of like the silver lining in your mind, showing you that like actually there's a decent possibility too that we kind of just constructively grind higher from this point. And so like we've had the sell-off, we constructively grind higher into September, and then we get that rate cut middle September, or we kind of go neutral-ish higher or whatever. I think that's an outcome too, specifically because we've flushed all of this leverage out of the system. It makes things a lot more stable and lends credibility to what I've talked about, which is actually think we could be maybe modestly up or kind of in that plus or minus 1 to 2% range versus the historical massive drawdowns we see in a typical August. If you're interested in seeing weekly video market updates on macro, the markets, everything in between, as well as my entire portfolio and every time I buy or sell, I share all those things in the Obsidian Council. Currently, the Obsidian Council is closed to new members, but if you're interested in joining the waitlist, there's a link in the description below. As always, none of this is investment advice. None of this is me telling you to do anything with your money. I'm obviously not your financial advisor, and you should always do your own research. If this video is helpful, make sure to hit that like button, and if you want to see more videos like this, make sure to hit that subscribe button and the little bell next to it to be notified each time I release new videos. Thanks for watching, and I'll see you next week.